네, 안녕하십니까.
Ladies and gentlemen, good afternoon. I'm Moon Chang-oh, Vice Director of GAFSC KIPF, and I'm your host today. Ladies and gentlemen, I would like to express our gratitude to all who are participating in today's web symposium at home and abroad. This symposium is strictly in compliance with COVID-19 quarantine measures and social distancing measures. It is streamed online in Korea and abroad. We are offering simultaneous interpretation service and is currently being provided for today's event. Second KIPF Public Sector Accrual Accounting International Symposium 2021 is a two-day symposium. It is held under the theme of the role of accrual accounting in fiscal management. Today's topic in particular is financial risk management using accrual-based financial information. Today we have case presentations from 4 countries, including UK, Australia, Austria, Switzerland, and it will be followed by panel discussion. As we begin, we will hear opening remarks by President Jae-in Kim of the KIPF, the congratulatory remarks from Director General for Fiscal Management and Coordination, Kyung-ho Han from Ministry of Economy and Finance, followed by a keynote speech.
Good afternoon. I am Kim Jae-jin, President of KIPF. Welcome all of you to the second KIPF Public Sector Accrual Accounting International Symposium 2021. Celebrating the second anniversary of the symposium this year, the KIPF Public Sector Accrual Accounting International Symposium offers a venue for public accounting experts from home and abroad together to discuss the current issues in the field and share key research findings to seek ways to improve public fiscal management. I would like to extend my gratitude to Principal Consultant Manji Color of Color Consulting from the United Kingdom, Mr. Mike Blake, Board Member of IPSASI from Australia, Mr. Bernhard Schatz, Board Member of IPSASI from Austria, Mr. Mark Wormus, Board Member of IPSASI from Switzerland, President Brian Pagan of Capital Perspective from Canada, Associate Professor Supung Chung in Accounting, Senior Project Manager Fabian Poularino of CNOCP. Also, I would like to express my sincere thanks to Senior Policy Analyst Iva Vigili of Public Management and Chair Thomas Mila Makespoke of IPSASI CAC for their presence despite the time difference. The COVID-19 pandemic has brought a profound impact not only on our health and daily life, but also on the national finance since its outbreak last spring. In order to curb the rapid spread of COVID-19, our government quickly carried out 4 unprecedented large-scale fiscal policies. In addition, the government is preparing for the post-COVID-19 era to better respond to the upcoming demographic change and to transform into a future-oriented economic structure with new financial expenditures. This expansionary fiscal policy of the current government aims to support the economy and to preemptively respond to huge changes with such timely action. However, on the other hand, the sustainability of government financing becomes one of the public concerns. In the national economy, the government financing plays even greater role and importance, and when it is taken into consideration, a thorough analysis of financial risk and corresponding actions are required more than ever. A rapid crisis can be turned into an opportunity with the right decision. To make the appropriate decision, reliable, transparent, and high-quality financial information shall be provided. Against this backdrop, the high-quality financial reporting can be achievable with accrual accounting system, which is attracting a lot of expectations and interest. Accrual information offers a systematic and unified basis to identify the elements of financial risk. It is very useful for reporting and managing. In addition, it provides a summary of fiscal position of the government in a more complete form, so it can contribute to precise long-term financial forecast as well as establishment of the appropriate policies. Accrual accounting was firstly adopted in 2010. Since then, GAFSC of KIPF has been actively carrying out the research to contribute to the development of the public accounting system. The KIPF Public Sector Accrual Accounting International Symposium will be the meaningful platform to share the public accounting studies and research on a regular basis. I would like to thank all the staff for their hard work to make the symposium possible, as well as to all the online participants. I would like to send a warm welcome and appreciation. Thank you for your attention.
Ladies and gentlemen, I'm Kyung-ho Han, Director General for Fiscal Management and Coordination at the Ministry of Economy and Finance. First of all, I'd like to congratulate you on the second KIPF Public Sector Accrual Accounting International Symposium hosted by KIPF and GAFSC. I would like to thank President Jae-in Kim of the KIPF and also Wan-hee Kim, the Executive Director of GAFSC, for inviting me to such an esteemed symposium. Also, I'm delighted to meet distinguished guests from home and abroad, including International Public Sector Accounting Standards Board members. Ladies and gentlemen, to respond to the global COVID-19 crisis, the role of finance is becoming increasingly important day by day. In an effort to overcome the pandemic, Korea also scheduled 4 supplementary budgets last year, followed by 2 supplementary budgets this year. Through this, last year, Korea reached minus 0.9% of economic growth rate, minimizing the negative growth during the pandemic. However, the national debt has increased by 6.2% point over the past year. The national debt has been growing rapidly in recent years. Also, there are many challenges such as aging population, income polarization, and climate change. Against such backdrop, the fiscal authorities are deliberating on how to manage fiscal risk to maintain financial soundness. Therefore, the role of accrual-based financial information for financial management, the theme of this symposium, is a very timely topic. Korea introduced the accrual-based accounting system since 2009. It is to manage national assets and liabilities comprehensively and systematically, conforming to the international standard. It is to produce accrual-based financial statistics to advance the national fiscal management. Through this, the assets and liabilities that were not recognized as national assets and liabilities is the best are now systematically recognized. As a result, this allows the identification of reinvestment timing of major assets, preparation of long-term countermeasures for provisions. The overall efficiency of the national financial operation is improved and preparing for future financial risk factors becoming possible. However, cash-based financial statistics focusing on a single year is mainly used for fiscal balance or national debt. In order to improve this, Korean government is looking at strengthening the analysis of financial information on accrual basis and the use of financial management information. I believe the use of accrual information in 7 countries, including financial risk report and financial position analysis report, will have policy implications for Korea. We sincerely hope that the collaborative research between the countries is vitalized for further development of accrual-based national accounting system. Thank you so much for inviting me. Thank you for your warm welcome, President Jae-in Kim. Thank you for your congratulatory remarks, Director General Han. Now, Chief Director of GAFSC, KIPF Wan-hee Kim, will share a keynote on the role of accrual financial information for fiscal management. Chief Director Kim is a professor of accounting at Kachon University. He also served as a Director General of Evaluation Management at Prime Minister's Secretariat. He is a public accounting expert and devoted researcher of accrual accounting and public institution evaluations.
Good afternoon. I am Kim Won-hee, Chief Director of GFSC KIPF. First of all, we will have 4 panelists and the online participants from a different corner of across the globe, and I would like to extend my gratitude to all of you. Because of the time difference, I believe that it is really early in the morning in Europe, and I know that it might be very tiring, but I would like to extend my gratitude to all of you to grace the symposium with your participations. And I'm pleased to deliver the keynote speech today. And today, the different country cases will be presented today. And I would like to talk about why we prepared and select this topic, and we will share the core findings. And we will talk about the policy implication and current status of Korea during my presentations. And the symposium is going to be carried out for 2 days, and I would like to briefly talk about what we are going to discuss today. As you're all aware of, and you can see from this map, among the OECD member countries, 33 countries, which is 85% of the OECD member countries, adopted the accrual-based accounting or budgeting. It is same for Korea. It has been 10 years since Korea adopted the accrual budgeting and accounting. And we conducted the collaborative research with OECD to find out the utilization of accrual information in different countries. And as a result, we found about 8 purposes or the targets: accountability, transparency, awareness on public finances, and others are included in the purposes. And the symposium has a theme of the fiscal policy and financial analysis and financial management. This is to improve the process of forecasting the fiscal impact and related risk. And based on the collaborative research in the 2017, we already knew that these themes are really important. And for the conclusion of the research with OECD in the 2017, as you can see in the presentation material, the biggest issue here is that the National Assembly and the general public have lack of interest on the accrual information. And one of the reasons why is the complexity of the financial statements. So accordingly, UK, US, Australia, France, and these countries recognize this issue, and they improve the overview summary, or they simplify the categories, or they are establishing a separate document to explain the financial statements. Korea reformed the government financial reports so that it is easier for the users to access the information and understand those information as well. Also, I mentioned the lack of interest, and then some of the measures from the accrual informations are not actually actively utilized in the mid to long-term policy. And also, they are aware of the scales of assets and liabilities, but not actively used for decision makings. So when I take a look at the other countries' cases, I believe that these countries were presented during the symposium. The UK has been actively utilizing the accrual informations. Well, actually, we have to have the in-depth discussions and analysis regarding this in Korea, so we can use the accrual informations in the future. For the 2 days of the symposium, these are the 2 topics: fiscal policy and financial analysis. And we are going to have the selected topic of the identification of fiscal risk. And tomorrow, we have the purpose and direction of the financial management. Actually, we have been preparing the symposium from the beginning of this year. UK, Australia, France, New Zealand, Switzerland, Austria, and the 7 countries presenters will present their case studies. We have, as I told you, we have been preparing the symposium for a very long time, and we carefully selected the presenters for the symposium. First of all, we are going to talk about the identification of fiscal risk for today. There are different definitions of the financial risk, but according to the IMF, it is a general definition. It's like a possibility of definitions of physical outcomes from what was expected at the time of the budget or other forecast. I believe many countries are exposed to this type of risk. The second are the special cases that can prompt the fiscal risk, including the macroeconomic shocks or the realization of contingent liabilities. For the past 10 years, the whole globe is exposed to the common risk. One of them is, as you're aware of, is the Lumen issue and COVID-19 pandemic. With this financial risk, how can we recognize and how can we respond to those financial risks? These are the topic of the symposium, and we conducted research with 7 other countries. And for the first day, we are going to share the cases of UK, Australia, Austria, and Swiss. The details will be provided by the presenter or the representative of each country to share the unique or the common financial risk. We are going to learn how they are recognizing this risk and how they are delivering or sharing these informations. On the second day, after recognizing those financial risks, we are then going to talk about how to manage asset and liabilities based on the accrual information. Tomorrow, we are going to learn cases from UK, New Zealand, Canada, and France. We have experts today, and as you're all aware, Korea adopted accrual information about 10 years ago, and we had the high expectations at the time. And one of the high expectations was a full costing. It means that we can gather the information regarding the cost accounting, and it can contribute to build a better forecast for the future. However, I believe that we are seeing insufficient results. And under this financial stress, we are seeing that management of assets and liabilities are attracting a lot of interest, and it is becoming one of the important topics. So UK, New Zealand, Canada, and France will share their cases, and we can compare each country, and we can reach or align some consensus. And in summary, UK, Australia, Austria, Switzerland will share their cases today, and these are the simple table that summarize the message of each country's case. And for the asset liability management, we are going to share the cases of UK, New Zealand, Canada, and France. Based on the research outcome, well, of course, we are going to have some discussion later. We summarize the implications from the exemplary cases. There are some of the common things or the lessons that we can learn from the cases. First, consistency. We can have the consistent process of fiscal management. Of course, some countries are using cash, or some countries are using the core information, and some countries are using both. But we believe that consistency is really key in the fiscal management from budgeting, accounting, statistics. And two, clarity. Well, simplification is really important. However, if it's needed, I believe we have to prepare another report to explain the financial statement. Third, I believe this makes sense, but it is very difficult to reach, which is expertise. We need to have a separate organizations to deal with this. And the fourth, the leadership is really important in this part. Well, actually, the role of Parliament and the Board of Audit and Inspection have to take active leadership. Fifth, in addition to that, we believe that the role of Minister of Finance is really important as well. When you take a look at the current status of Korea, like other countries, Korea is using the traditional way and to recognize and manage D1, D2, D3, just like other countries. Also, we are using accrual information for the management of assets and liabilities. However, the attempt to strategically manage or use is very limited. So, as you can see from this slide, I will talk about this during the discussion. However, for the brief informations, we are having a lot of accrual information. However, the utilization of this information in the decision-making process is not sufficient enough. And for the 2 days, I believe that we can learn a lot of excellent cases from other countries' cases and figure out how to utilize those accrual informations in our decision-making process. Once again, I would like to extend my gratitude to other participants who are here with us despite the time difference. And I am expecting the heated discussions and sharing your insights during the symposium during the 2-day symposium. Thank you very much. Thanks for your presentation, Chief Director Kim Wani. As mentioned in the presentation, accrual information will be of great benefit of identifying the financial risk from the fiscal management aspect. However, there are no clear institutional change found in Korea. So now let's take this moment to learn the cases of the UK, Australia, Austria, and Switzerland. The first presenter is Principal Consultant Manji-Collar of Collar Consulting. As a certified public accountant, Ms. Manji-Collar has served as the head of the public sector of the ACCA and technical manager of the central government and financial management at the KIPF. She also participated in the preparation of the whole of government accounts sub-consolidation manager, UK Department for Communities and Local Government. She is now the president of Collar Consulting, actively conducting research in the public sector. Ms. Manji-Collar, now floor is yours, and you have the presentation time of 15 minutes.
Good morning, good afternoon, and good evening, from depending where you are. Komapsin Nada. I'm sorry for my pronunciation. Annyeonghaseyo. Thank you for inviting me. Lovely to be here and to be able to share with you the UK experience of a perspective in terms of fiscal risk reporting. Thank you for the kind introduction. I am Manj Kalal. I've worked for the UK central government 18 years, looking at implementing accrual accounting, then at SIP and ACCA as I was kindly introduced. And I'm an independent consultant that gives me the complete freedom to help, advise and guide on various international projects on public financial management and implementing accrual accounting. So today, what are we going to talk about? Conscious of time. So the agenda is really to showcase how fiscal risk reporting has evolved and developed within the UK in a relatively short period of time. So hopefully that will give you hope that a lot can be achieved in a very small period of time. Then we're going to look at the importance of the role of the Office for Budget Responsibility, the OBR, and the impact. So what? We're doing all of this, so what's happened? But it's useful to showcase the difference that fiscal risk reporting has happened in the UK. Given the constraints of time, we only have a few minutes, but I would encourage you to have a look at the full report for lots more information about what's been achieved. And also, I'm going to showcase some examples of how fiscal risk reporting is presented in by the OBR in the UK, because I hope it will give you some ideas and in terms of how to present information in an engaging and meaningful way to the users. So more people use the information, they ask for more information, and it creates that virtuous circle of demand more information, provide more information, and you have lots more questions that lead to a better solution. And then once we've evaluated fiscal risk reporting, we'll have a quick think about the future. So, as I've said, I can only provide a brief overview in 15 minutes. So how did fiscal risk reporting evolve in the UK? Actually, fiscal risk reporting in the current format is relatively new. It's only been around since, 2016, 2017. In fact, it was the IMF in their UK fiscal transparency evaluation that said the absence of summary reporting on specific risks is a weakness that should be addressed. And the government's control of risks falls short of the code standards of good and advanced practice. Now, we had the Office of the Budget Responsibility and National Audit Act in 2011 created an independent Office of Budget Responsibility. Office of Budget Responsibility, and they established a charter of what they were going to do. And in the autumn of 2016, in response to the IMF report, we decided to extend the charter, the responsibilities of the OBR, to create a new report and require them to do fiscal risk reporting and fiscal sustainability reporting. So we consulted widely, and back in 2017, we first launched the first fiscal risk report. Now, fiscal risk report, as has already been defined, first issue we had was how to define fiscal risk. And we looked at the IMF definitions, and the IMF looking at medium term and short term. So medium term and long term. So how do you define medium term? We defined medium term as 5 years and long term 50 years. Now the long term data was drawn from a whole of government accounts. We mentioned before, and we'll talk about it more tomorrow. For those of you attending the second day of the symposium, I hope you will make it. They looked at fiscal risks, and most of the long-term risks are actually drawn from information in our whole of government accounts. So that was in 2017, was the first fiscal risk report. And then the second fiscal risk report was published in 2019 as required. They updated on the risks identified at 2017. Also, they provided an update on the formal response that the Treasury, the Ministry of Finance, gave on the looking at risk mitigations in place and the management of risks. So that's the process. And then we had the third fiscal risk report in 2011. Now, the latest report's been quite different because they were looking at risks on a thematic basis. I'll talk about that more in a moment. Now, this analysis, well, where are we? Actually, UK is very new to fiscal risk reporting, relatively, because it's only 2016 when we started. So in a few short years, lots have changed. The first thing we did, and I would encourage you to do the same, is to have a look at international comparators. So drawing on this report from the OECD by Delphine Moretti, where she looked at and compared fiscal risk reporting. Now, the UK is pretty unique in the fact that they've effectively outsourced the preparation of fiscal risk reporting. So the Office of Budget Responsibility prepares that. They prepare the report, but they don't manage risk. The management of risk remains the responsibility of Treasury, HMT, the Ministry of Finance in the UK. and it's for them to manage the risk and to formally respond to the OBR on the risks identified. We have Finland, where the Ministry of Finance prepare the fiscal risk report, but that's prepared by the lead government official, yet the ministers formally respond to it. And we have in the Netherlands, we have fairly independent risk reporting by the Central Planning Bureau, but government is not formally required to respond to the risks identified. I'll leave you to judge whether that's a good thing or not. In Australia, fiscal risk reporting is analysed by each government ministry or department or agency. So there's greater accountability close to the organisation, the entity that's responsible for that policy function. And finally, New Zealand, always leading the way. They actually list all of the risks and quantify them. Quantifying risk is very difficult, but as I say, New Zealand always leads the way. So I've talked about the Office for Budget Responsibility. The key thing we wanted to do, it was done within the United Kingdom, was to really think about independence, not just being independent, but seen to be independent. And it's key to the credibility of the Office of Budget Responsibility. And the Charter says it is the duty of the office to examine and report on the sustainability of public finances. To do that, they are required to formally prepare a number of reports, so the economic and fiscal forecast, evaluating performance against budget, and sustainability and balance sheet analysis, valuation of fiscal risks, and tax and welfare spend scrutiny. We had a major fiscal event last week, Wednesday. We had the budget where the Chancellor of the Exchequer, the Minister of Finance, presented his plans for taxation for spending for government over the next 5 years, depending on GDP forecasts. But those forecasts weren't prepared by them. They were prepared by the Office of Budget Responsibility. And the Office of Budget Responsibility reviewed all of the forecasts and the projections to see they were credible. So there was a lot of discussion about it, but it's established itself very quickly as being important in terms of how the UK manage and report on risk. So I've talked about the OBR, but who are they? The OBR is actually a relatively small organisation of only, when I think that central government, in UK central government, there are over 10,000 accountants. To put it into context, the OBR in total, there are 35 staff. And that may surprise you. This is the structure, and they've got various levels of skills and competence. There are economists, statisticians, and analysts, and they rely on, obviously, information through memorandum of understanding with individual government departments. I've circled here fiscal risk and sustainability that's led by Jim Ebden. He would have loved to have been here today, so you've got me instead. But I'd like to thank him because he gave me a lot of his time and shared his knowledge and expertise to guide me to say how fiscal risk reporting evolves and plans for the future in the UK. So I've said that fiscal risk reporting is done by the OBR. So who manages the risk? Treasury. And as you can see from here, the fiscal risk group report directly to the board. They've got the tax group and spending directors, and of course the balance sheet group. So what kind of categories do we use for fiscal risk reporting? Well, you've got economic risk, financial. Let's take revenue. What's the revenue risk? Revenue risk, there is an assessment on, will we get the tax revenues? Is there going to be compliance? What's the tax policy risk? So also there's spending, balance sheet, and fiscal policy. So going back to the timeline, like I said, a lot's been achieved in a relatively short period of time. In 2017, there were 57 risks. And in 2018, the Treasury formally responded to this. Actually, it was a very detailed response, and I would actively encourage you to have a look. In 2019, the second fiscal risk report was published, and there were 97 risks. Now, you could argue, did our risk reporting become more comprehensive, or were we better able to identify risks, or is it that the first risk report led to more people coming forward to say, actually, you need to look at different risks? Obviously, because of the period we've been in, otherwise we would be all together in person because of COVID, but because of the pandemic. In 2020, there was a mini response by Treasury. When I say a mini response, because under legislation, the Treasury is required to formally respond to the fiscal risk report. They presented a minute to a short response, half a page, to Parliament. So delivering on accountability. Now, the 21 fiscal risk report, the third fiscal risk report, they looked at not just an update on the risks, they actually looked at catastrophic risks that were identified, particularly because, well, we say these are really big risks and they shouldn't happen, or big events, but we've had two once-in-a-lifetime risks being crystallizing in just in a decade. That's the global fiscal risks and global financial crisis, and then the government sovereign debt crisis that was created as a result of that. And secondly, obviously, pandemic and the government's naturally the government's response to that. But we're not unique in the UK. The fact that two big risks have happened in 2 years actually made us, in a decade, has made us think, well, we need to really think about catastrophic risks instead. You may say, so what? What's the difference that's been made as a result? Well, the impact of the fiscal risk report, there have been loads. Let me just pick on one for brevity. Contingent liabilities. What's happened? It's really been highlighted trends from the whole of government accounts. Let me just take it back. The whole of government accounts we have been preparing and publishing since, well, we've been preparing it for a lot longer, UK, but we've published the first one in 2009-10. So there's a lot of trend information in there. But the fiscal risk reporting really highlighted that to say, actually, have we thought about it? And one of the risks, the massive risks that have been increasing were contingent liabilities. And with these crystallizing, obviously that could impact on sustainability of long-term sustainability of public finances, which has led to the creation of, so it's made huge changes in policy as well as in terms of management of risk, and a new contingent liability capability center has been created. So that's been a real tangible change. So for brevity and for time, I won't go through all of these, but it has led to, it's a very, like I said, it's a virtuous circle. It's led to more transparent reporting in the balance sheet too, because there's been greater demand for information. So what information do we have? Is it easily understood? Also, it's identified what we call pervasive fiscal illusions, particularly by the student loan book. There was an aim to make sure we reduced the deficit and debt as a percentage of GDP. So assets were sold, but not really thinking about the impact on the liabilities. So it made us really think, is a policy having the right outputs and outcomes, and we're not storing up issues for the future? So the 2021 fiscal risk report, what does it look like? As I said, it provides an update on the 2017 risks identified and 2019. Well, that's probably normal if you think about it, because the risks are for medium-term risk, 5 years, and 50 years. So realistically, not much is going to change in 5 years when we're required to report on fiscal risks every 2 years. So just looking at the economy risks, I will say to all of you, by the way, in the slide deck, you'll have more slides but I'm for brevity and making sure that, well, we've got time to listen to all of our presenters today. I thought I'd focus and present to you what I think is a really good diagram in terms of how you present the information. And this is really important, I think, for in terms of engagement with your audience and connecting with them. There's a lot of complex information. I haven't been paid by the OBR to say I think this is a great slide, a great way to present the information, but I do think it is. What they've tried to do is really consider the best way to present complicated information. You'll see on the x-axis below the bottom, at the bottom line, you'll see the probability of crystallization of the risk and the potential impact on public sector net debt by 2025-26. This is obviously looking at medium-term risk. So it's looking at the various quadrants and the movement since the previous fiscal risk report. You can see the arrows. And also new risks that have been identified have been added in. It may surprise you to note that pandemic scarring of pandemic risk is relatively new. So, have we got fiscal risk reporting right? I would say it's a work in progress. We're doing very well. Could do better. So that was the medium-term risks, and these are the long-term risks. Again, the same document, same presentation. You will note sort of the top right-hand side, all of the risks are really around our health spending due to largely an aging population. So you're not unique, as you've said. This is an issue that we're all facing. How do we meet the costs of an aging population? Again, new risks identified, future pandemic, and unmitigated climate change. Very pertinent at the moment, given that the UK is currently hosting COP26. Let's hope they come to really not just a decision, but action. I think we can all hope for that. The final slide I want to show, with just from the fiscal risk, is really to demonstrate to you, again, presentationally. This slide shows the change in risks, but also you can see the number of risks, whether they're going to increase, if they've increased or decreased or unchanged. But also it shows you how many risks, what the impact of the pandemic has been. So you can see, say for taking the red risks, looking at the number of increase in risks, most of these have been due down to the pandemic. Okay? So we'll talk about the economy risks. I won't go through all of them, but the biggest issue we have within the UK is weak productivity. And we've also called it the productivity puzzle. We can't really understand why it is that productivity remains very low, but obviously that will have a massive impact longer term in terms of GDP and growth. So it's very important for us to be able to work on that. So I said fiscal risk reporting's changed. So what's changed? So in 2021, we didn't want it to look too, move away from the encyclopedic analysis. Previous risk reports are 300 pages plus. But wanted to think about, well, let's look at risks thematically. So they're looking at COVID-19 risk, the pandemic, the COVID-19 pandemic risk, climate change, and government debt. So those are the biggest risks. So what about the pandemic risk? The biggest risk will be on public finances because it's had the greatest peacetime impact on the global economy since the Great Depression. We all know that, and we're all grappling with that challenge. Healthcare systems, these are already stretched. How do we do that? And stricter lockdowns. Now, the UK economy is very service consumption based. Having a lockdown has had a far greater effect. And the OBR reported at the budget last week that the scarring effect has been 2% of GDP. Pretty bad in terms of the G7. So climate change, we are looking at, in terms of looking at risks on climate change, they're looking at the fiscal risks posed by climate change. We are not unique. UK have been having severe weather, freak once in a lifetime events in terms of flooding, which seems to happen more often. where we're having a month's rainfall in one day. How do we manage with that? So they're looking at the risks and the cost to the economy for that, and the fiscal implications of alternative paths to meeting the commitment. More about that later, hopefully at the questions. And then looking at the cost of public debt. Now, the fiscal risk report considers the potential impact of interest rates, inflation on the growth of public debt. Put it this way, a 1% increase in interest rates will potentially have a £20 billion debt servicing charge that has to come out of current spending. So that's why this matters, thinking about what's happening. Okay. So to conclude, where are we going? Where next? Bearing in mind the risk reports are having the fiscal risk reporting, we're doing this every 2 years. How effective can we be? The fact that we didn't even register, UK didn't register the pandemic as a potential risk and the impact that's had, with more to do. But what the future of fiscal risk reporting is really to think about, how do these remain relevant, insightful, and meaningful to the users so that we do capture risks. One of the things we don't do yet, UK don't do, they don't talk about cyber risk. And cyber risk, when you think, well, that's probably one of the biggest risks. And yes, there was a huge malware risk on the National Health Service a couple of years ago, which put the system down completely. So you could argue, well, why haven't we recorded that? UK tend to look at the risks in terms of what's identified, where there's lots of evidence in the past, so that we can look at that. So without further ado, I just want to say Komatsinada for your time, for listening. I hope I've kept to time. So thank you very much.
Thank you very much, Manjkaha. I understand it's very early in the morning in UK. Thank you so much for being with us at such an early hour. Thank you so much for your presentation. The second presentation will be presented by Mike Blake, Mr. Mike Blake. He has been serving as a board member of Gfcs since 2016, and he is the board member of Australian Accounting Standards Board. He has been actively leading the effort to prepare the public accounting standards. He served as an Auditor General of Tasmania and board member of Auditing and Assurance Standards Board. He also has field experience in fiscal management. Mr. Blake, the floor is yours.
Thank you. And can I assume you can hear me and see the screen? Yes, thank you. Look, thank you very much. I applaud the KIPF for this forum. It's a great initiative, thank you, and it's wonderful to be involved. And thank you for inviting me to prepare my research paper. And a particular thank you to Grace Choi for all the assistance she's provided to me throughout this period. So I'm going to talk about accrual accounting and its relationship with asset management and fiscal risk. I'll just make the point, though, that a lot of the findings in my research paper were based on my own experiences, not necessarily also on the research that I carried out. So I'll cover those things, a bit of background, what I was asked to look at, what my major findings were, and I was asked to look at some specific things like costs, usage, drivers of success, and so on. So I'll try and address each of those quickly. So background, I was asked to research how the Australian government has used accrual information to identify and manage risks and assets and liabilities. My research was based on a review of official documents and some unofficial documents that I'm aware of. And I was asked to do some interviews, but that proved difficult because I just couldn't get hold of a lot of people who knew a lot about the subject at the Treasury in Canberra. But I did get some help from one particular person who I will share this information with later. So I was asked to look at identification of fiscal risks and how we manage assets and liabilities. In doing so, I looked at Australia's experience. Obviously, we've been accrual accounting in Australia for over 30 years. Accrual accounting, accrual reporting initially, and then accrual accounting, and now accrual budgeting. It's important, I think, that you take into account all three aspects, not just accrual accounting. The major findings, first of all, I think I'll cover off the legislative requirements first, because whatever I'm going to say next is covered by legal requirements, mainly through a number of pieces of legislation that require governments to continue to manage fiscal risks and asset and liabilities in a consistent way, so we don't keep changing the way we collect and report information. So there's a framework under which the government's got a report, and that's been approved by our Parliament and now becomes standard practice. The official government reports that I identified, firstly, was the budget papers, which is obvious, the mid-year economic and fiscal outlook, the final budget outcome, various intergenerational reports, which I'll talk about later, the need for a pre-election economic and fiscal outlook, whole of government financial reports, and those are also required by legislation. Uniform presentation framework is perhaps a bit unique to Australia in the sense that because we're a federation, what they decided to do here was to require all the states, territories, and the federal government to present their financial statements in a consistent way and to present their budgets in a consistent way so that there was comparability. So what are these statements and budget documents that I've been talking about? So the budget papers in Australia comprised of 8 documents. First of all, a budget overview, which I won't talk about, the economic outlook, the fiscal strategy, so what are their plans, how are they going to manage their fiscal risks, the labour market, terribly important for Australia because we have so pre-COVID relied on migration to boost our labour supply. That's dropped away significantly because of COVID, because our borders have been closed, so we haven't had people coming to live in Australia. In an environment where we are an ageing population, that's created challenges for us and new risks we have to deal with. There's a paper dealing with our revenue risks. How are we going to spend our money, both in terms of operating costs and capital investment, how we manage our debt, and then a statement about our risks. In the context of this particular forum, the economic outlook and the statement of risks are found the most interesting because they discuss Australia's government's view about what the risks are and how they're going to manage those risks. So the obvious one is COVID, but it's not just about COVID. They also discuss climate change impacts, revenue risks, debt risks, and so on. So those documents are really helpful in terms of setting the scene for the government and why they've arrived at the budget numbers that they're proposing. The metrics that I identified that were critical to understanding what the various different fiscal management tasks are and how we manage our assets and liabilities are on that slide. I'm not going to go through each of them. The ones that are asterisked indicate that they are also used to manage assets and liabilities, but there are a series of metrics that are used commonly in Australia and throughout our budget papers. I like the fact, I think Manj referred to the budget office. We have a parliamentary budget office, and they also review some of these documents and provide them with an independent assurance. And they also define each of these terms consistently with the government, which gave me some comfort. And there's a few more metrics that we also apply throughout these documents. I was asked recently at a forum that I was at with a bunch of accountants, and which of these particular metrics was the most important. I don't think there's an answer to that. It depends on the issue you're trying to deal with. So, for example, if you're trying to manage climate change risk and some impacts that climate change may have, such as floods and droughts and so on, then your net worth will be critical because it indicates the ability of the country to manage its assets and liabilities in those sorts of times. So I won't go into any of those definitions for those terms, but they're in my document. So I was asked to look at costs and expertise. What does it cost to prepare all these reports and to then manage fiscal and asset and liability risk? That proved very difficult for me to identify. Our discussions with our finance department indicated that if you really want to understand what it is that the expertise that's required, who are the people that do all this work, it might be best for the KIPF to engage with our finance department to get that information, and they've indicated a willingness to do so. So I'm afraid I didn't satisfy that requirement. I was asked to look at usage, and I found very strong usage by parliamentarians at the time that the budget is issued and during what we call our estimates process or our scrutiny of the budget process. And there was strong interest by the media around the budget time. However, very little interest at the time that we produced the outcome reports, which I think is a pity. So I did some research on to what extent when we issue our whole of government financial statements, does anybody take any notice? And I'm afraid I think there's a gap in that respect. And I think it may be simply because the documents are very complicated and they're hard to understand, they're hard to interpret, and there's a need for some simple explanation of what the numbers are telling us. And I think if we did that, we might get better engagement by parliamentarians and the media. Look, drivers to obstacles and success. If you are interested in pursuing greater accrual accounting, accrual reporting, and accrual budgeting, then those are the sort of things I think you need to look at. We established frameworks, we established standards that everybody had to report under. We put the legal requirements in place. We did use Study 14, which is the international IFAC, the International Federation of Accountants guide, and is very helpful documentation. Make sure that you've dealt with critical success factors. Is there leadership from the top? Is there effective planning and communication? Don't have a big bang approach, and make sure that key stakeholders like auditors are engaged and that there is an independent budget office. Look, I'll take it from there. Thanks. Happy to take questions at the end of the session. Thank you.
It was a great opportunity to learn the financial risk management of Australia. Thanks for your presentation, Mr. Mike Blake. Next, we would like to invite Mr. Bernhard Schatz to the floor to present the case of Austria. Since 2006, he has been serving as a board member of IPSASB, and he is now Senior Manager and Public Sector Accounting Advisor Leader at PwC Austria. He has expertise in public finance management with experience of working as a deputy head of budget unit and senior advisor, Federal Ministry of Finance Austria, and senior public sector accounting and audit expert. Mr. Bernhard Schatz, please begin your presentation.
Thank you very much. Thanks for having us. It's a pleasure to be here and an honor as well. Just wanted to start my presentation thanking Manj and Mike to setting the scene and giving us a comprehensive overview on fiscal risk management in their countries. Having heard from two veterans in the field, Australia and the UK, our country, Austria, is actually a fairly new one. So we introduced accrual accounting and accrual budgeting in 2013. So there's about 8 years' time of experience. And what I wanted to highlight to you as well is actually that you can see that there is a learning curve. So it takes time to get accommodated with the instruments and to get people up to speed, to use them properly. And we want to focus in our presentation on the findings we had in our study when we talked to our ministries on how they could cope with these instruments in respect to fiscal management. So maybe as a first point, just to set the scene, how is the fiscal management system in Austria constituted? There's a joint responsibility between the Ministry of Finance and the Court of Audit in setting out the regulations for the budget entities and the ministries on how to perform the public financial management. Major elements of those are the organic budget law, budgeting and accounting regulation, the asset management regulation, as well as the closing of accounts regulation. Also, in Austria, we do have a central IT system for all the entities. So there's a responsibility for the Ministry of Finance and the Court of Audit to set the requirements for the IT system and to check on its readiness and usefulness. We also have a centralized agency, a so-called bookkeeping agency, which will support all the ministries in compiling the information, compiling the accounts, also serving as an advisor, but also giving an element of the 4I principle, making sure that the accounting recording is in a proper condition. And of course, we have oversight by the Court of Audit and the Parliament. We also have a Parliament budget office, which will regularly oversee the midterm, but also the end-of-year reporting elements. And we have a centralized debt management office, which will take care of all the financing which is necessary for the operations of the Federation. And of course, then we do have the reporting entities who really perform on the public services, who record the transactions, who report on them, and who are finally accountable for how their decisions turned out in a financial manner. And what we really want to focus on today is those reporting entities, those entities who really operate the system. From the budget cycle time-wise, you can see on the right-hand side of the slide that usually this is the cycle how it goes, that there's the draft budget and the medium-term expenditure framework, which I think is a very important element as well. Then this draft goes to Parliament, there's a discussion and approval, and then it is forwarded to the ministries for execution. And then during the year they perform on that. Again, there is oversight by the Court of Audit and the Parliamentarian Budget Office. And at the year's end, there's the financial statement, the annual report, to be compiled and again sent to Parliament with the audit opinion of the Court of Audit. So this is the basic cycle, how it goes. And bearing that in mind, actually, we designed a study where we wanted to focus really on what sometimes is a bit overlooked is the human element of those things, because there are legal requirements, there are IT systems, but obviously there have to be people in place who operate them, who champion the outcomes of those systems. And we really wanted to get some insight into their daily business and how they operate with those. We pre-structured the questionnaire so they could pick and choose from some of the answers we could think of, but they also were able to add to this kind of pre-structured questionnaire. But it allowed us to aggregate actually answers and compare it from the reporting entities. Like Mike said, it was quite a challenge to get hold of people during the pandemic, and I really want to be very grateful to my colleagues who supported us and gave responses, because we really know that this has been an extremely stressful time for the ministries. So thanks again for coming back to us with the responses. So for the case of fiscal risk management, we aligned with the IMF definition of fiscal risk, like it's been mentioned a couple of times already. And the interesting part really is that fiscal risk management is very much at the heart of public financial management. So if you have a budget to run, it's really important to see where you could have overruns or where you might have underspending you might be able to use in different areas. So how can accrual accounting actually contribute to that? And we identified 3 areas actually where we felt there is a benefit. And the first one is really about the field of contingent liabilities and provisions, like it's already been addressed, but also as well on the liability side of long-term and short-term liabilities, so you can anticipate your financing needs and maybe proper revenue, which might contribute to that. But also the area of impairments, so the question of actually looking at your assets, what kind of risks and dangers are insight for those assets and how would you evaluate those, can be a very significant element of risk management. So on the left-hand side, you will see how it's currently reported in a financial statement in Austria. The first, and I'm not sure if you can see it properly, I do hope so. If not, this is strong encouragement to go to the report and see all the tables and graphs yourselves. But the first table is really about the guarantees. And there is a whole chapter in the financial statement dedicated to the guarantees and the management of guarantees. And as you can see, it's by entities, by financial institutions, non-financial institutions. And it's a whopping figure of about 90 billion euros, which currently is outstanding in guarantees. But what you can also see in the financial statement is actually the long-term provisions and the short-term provisions associated to a couple of those risks. So not all of those materialize in provisions, but what really happens here is you have to check your contingent liabilities on the likelihood of impacting, like Manj outlined in her presentation as well. And you really have to make a decision whether they have to be recorded in the balance sheet or not. And I think this process is really a huge advantage of accrual accounting, because it really forces you to make a decision actually. So we also ask people about the challenges they face compiling this information, and quite frankly, it's been all over the place. So no entity had the same challenges, so they were all different, which makes sense to us because a couple of those are really very well versed in managing their risks. They have very clear legal requirements. Others have a much, not so much regulated area to manage, and they struggle sometimes. So we had a couple of those who said there are no challenges at all. A couple of them said, well, what we have a lack of is really that on my decision-making level, there's not a lot of power, not a lot of decisions to take. They also said that sometimes financial data is not provided in a timely manner, and not in the quality they would have to have it to really take a decision on that. And they also said sometimes the lack of accounting knowledge plays a role, as well as the data not really being demanded by senior management. I think this is a really important element as well, that as a manager you have to ask for the information to be prepared on a proper level. So those are the results which came back from our respondents. So the first question was really, how do you use your provisions? And about 25% said we don't use them at all. Right, so we compile them, but we don't use them for our decision making, and that could be because it's not really a predominant risk, another risk they can manage on their level. But I think this was a very good and honest answer as well. A couple of those, also 25%, said, well, we use it, but just if somebody else asks, right? So if the Court of Audit asks us or the Budget Office asks us, we use these numbers to report on them, but we don't use it for internal purposes. Then actually 50% said, well, we use it for if there's a huge event, right? A single provision which is huge, we're going to look back and check what was the purpose actually and how did it develop. Actually 75% said we do this on a systematically basis. We really want to manage our provisions and manage our risks, and we have a systematically review on a regular basis on how to reduce those provisions. When it came to liabilities, actually, the picture was quite different. And I have to preface that, we have a centralized financing element. So usually ministries are not engaged in financing those liabilities. So 50% said we don't use the information of liabilities at all because there's a central agency taking care of that. But actually also 50% said, well, we are watching our liabilities because we want to identify budget constraints ahead of time. And really see where we will need more budget, or we would have to shift priorities in able to make the budget. So I think this was also a very interesting finding. And then on the level of impairments, it didn't come as a surprise to us, to be honest, that actually 50% said they don't really use impairments at all, or they don't perform them at all on a systematic level. And some of them said, well, if somebody else is bringing us an impairment trigger, like the Court of Audit or the Parliament, we're going to check on that. But we're not really proactively using that piece of accounting knowledge to spur our accounting information. And when we asked them actually, well, how would you promote the use of this information? How would you feel encouraged to use it more? Actually, there was a lot of good ideas coming from the respondents. So 50% said, well, it's fine. I think we can live with the level of information we are having currently. But also 50% said, well, senior management should be more interested in this information. So if they ask us, we're going to prepare it. But we struggle kind of preparing it in advance, and then actually nobody's really asking for that. 75% also said, general training and certifications would be really helpful, also for people to speak up and speak their minds and feel comfortable actually compiling the information and then again being able to explain it to third parties. And 25% said they feel IT tools would be helpful as well, to visualize information, to be able to break it down in different breakdowns. But what really got the strongest feedback was the whole question of the fiscal rules. So a respondent said, actually 75% of the respondents said, well, if this would be better integrated into our fiscal rules, it would get more attention. So I think it's really important to understand that if you are just looking for a cash surplus or a cash deficit in your fiscal rules, you shouldn't be surprised that actually a lot of the accounting information is not taken into account when making decisions. So this is, I guess, a really important topic, and I think we will hear a lot of more about that also when it comes to asset and liability management. So in a summary and concluding on what we've heard from our respondents, they were using accrual accounting information, but not in all the areas we could identify. It currently is dominated by the legal requirements and the external reporting requirements, but also there's a strong usage for this classical financial risk management in the area of guarantees and provisions. So this is a very known field for the colleagues, and they struggled a bit in the other areas which were not as well known for them. We identified also challenges like the lack of accounting knowledge. So training is always an issue, particularly if you have to explain it to your superiors. You have to explain the information maybe to third parties, to the public. So it would be really good to have a strong knowledge on that. But also the flexibility of IT reporting was an issue, and the lack of demand from senior decision makers for that type of information. And again, for the ideas to promote the use of accrual accounting information, they said training, general, but also certification, but really integrating those elements, these accrual elements, into their fiscal rules and the budget cycle. So yeah, currently the information is used. As I said, it's not used in all the areas we identified, and usage could really be enhanced through training, education, and for especially integrating it into the fiscal rules system. So in a wrap-up, that's the findings we had from our study for the fiscal risk management from the perspective of the users, of the people really on a daily basis managing those systems. Thank you.
네, 그 버나드 하츠 위원님 발표 감사드립니다.
Very much, Mr. Bernhard Schartz. Next presenter is Mark Wormuth, and he will present on Switzerland experience. Mr. Mark Wormuth will present on the experience of Switzerland, and he has been serving as the board member of ISSAS. He served as a senior accounting policy advisor at Federal Finance Administration. He is currently a governmental statistical officer at Federal Finance Administration. Mr. Mark Wormuth, the floor is yours.
Thank you very much. I hope you can see my presentation. Thank you very much for the opportunity to present you. Now I see the slides are a bit too far. I just go back. Now it's correct. So thank you very much for the opportunity to present you our country experience with the implementation of accrual accounting. My presentation has 3 parts. I'm going to start with an overview about the accrual reform in Switzerland. You see here 4 different stages for public centers in Switzerland. I'll start with, I think Switzerland has been in the past 40 years already moving to accrual accounting. First was the state level, where there's 26 cantons accomplished 2 major accounting reforms. The first one in the 80s, moving from stage 1 to stage 2, from cash or modified cash to modified accrual accounting. And then in a second project, which happened the last 10 years, they moved from stage 2 to stage 3 with a flexible but still unfinished full accrual accounting. However, the bigger cantons applying IPSAS, they are already close to stage 4. On the federal level, until 2007, the federal level was in stage 2 with modified accrual, and then it moved close to stage 4 with the implementation of IPSAS, which was rather a big step at once. Now, focusing on the federal government, as you can see, 2007, there was a move from modified cash accounting and budgeting to accrual accounting and budgeting. However, some important deviations from IPSAS remained. You can see them stated here. For the sake of time, I won't repeat them now. But then in 2017, 10 years later, after some experience, we managed to close most gaps to IPSAS, except for tax revenue, where the information is not fully available for accrual accounting and second reporting. But maybe one of the most important milestones, I would say, will be happening next year, when the main fiscal policy instrument, the debt brake, which was introduced in 2003, will be based on accrual accounting. I will tell you more about this along 2 examples. So first of all, accrual accounting obviously plays an important role in the identification of fiscal risks in Switzerland. How can fiscal risks be classified? You can see a possible way on this slide, is a way which is to distinguish them between explicit and implicit fiscal risks, and also along their conditionality. As you can see with the examples, it is obviously not all of these risks can be recognized in the balance sheet, especially the more conditional they get and the more implicit, the more difficult they are to measure, or they don't fulfill yet the definition of a liability. However, accrual accounting can play an important role for some of the fiscal risks by making them more relevant for policy decision making. In the light of COVID-19, additional measures were implemented encompassing new fiscal risks, such as financial guarantees, which only crystallize over time, but don't affect the budget balance in a cash accounting system. In an accrual accounting and budgeting environment such as Switzerland, they will be taken into account at the time the liability is generated or created. So this means that an expense or example, a new provision or an increase in an existing provision is relevant for the fiscal rule, or expressed differently, is being charged to the debt break, which is earlier than at the time of the payment of the liability. So I think this is exactly what Bernhard just mentioned before. In Switzerland, we try to integrate these provisions or these fiscal risks into our fiscal rules. Now you can ask yourself, well, are these provisions manageable? In the case of guarantees, probably they are not directly manageable because the call of the guarantees depends on external factors which cannot be controlled by government. However, because they are being included in the fiscal rule, they obviously need to be financed. So an increase in a provision needs to be financed by a corresponding revenue item. Otherwise, the debt break cannot be met during a long term. And I think this is exactly the thing that happens. Then it may have an impact on other expense items which can be controlled in order to be able to finance the provision. Now, I mentioned this example, COVID-19 guarantees. I won't go, for the sake of time, too deep into this slide, but you can see that by 2020, the maximum exposure due to issued guarantees amounted to 15.2 billion Swiss francs. And with regard to the risk of future cash outflows, the government estimated an expected loss over the lifetime of the schemes and recognized a provision of 2.3 billion, which from next year on would have to be financed using the fiscal rules. Now another example, which I can say where accrual accounting information triggered discussions and triggered or enabled decisions. This is the federal government recognized the provision for the retirement benefits according to IPSAS 39 from fiscal year 2017. It amounted to 11 billion Swiss francs, which became one of the most significant single line item on the liabilities side. This triggered several discussions on different levels within the federal administration. Namely, the following questions in terms of the liability were raised. What is the legal obligation by the employer in terms of a funding shortfall? Is it above 50%? What is the customary entity-specific practice in the past? So how did the government deal with underfundings in the past? And does a risk-sharing approach better reflect the nature of the obligation of the employer to bear the costs of a shortfall? You can see this here. I think it's important to mention that the federal pension plan is a defined benefit plan. However, in the event of a funding shortfall, the risk must be shared between employer and employee according to the regulatory framework. So this means that the employer has no legal obligation to pay more than 50%. However, above that threshold, a de facto obligation for the employer to pay restructuring contributions can be derived from customary company-specific practice in the past. But this is definitely not 100%. And in light of possible higher shortfall in the future, it remains highly unlikely. This is why the government decided to take financial assumptions into account in 2 steps. I will also not going to explain them to you for the sake of time. However, it reduced quite to some extent the existing liability because they've said that not the whole liability must be borne by the employer. So it is important that these assumptions were made from the perspective of the employer and not the pension plan. But it is also important to mention that it derives from the principles in IPSAS 39, and it was, of course, a matter of professional judgment. So the change in accounting estimate led to a reduction of the net liability of around 2.3 billion francs in the opening balance sheet of fiscal year 2019. This amount more faithfully depicts the economic reality and the risk exposure of the federal government, and it also resulted in adapted processes and responsibility in determining what is the obligation of the employer. Furthermore, it can help to stimulate earlier discussions on measures to be taken in order to guarantee the financial sustainability of the pension system, and also equally important, not overstating the liability in the employer's balance sheet also avoids an incentive for the employer to push towards more fundamental changes of the plans, which means that these accounting figures don't forestall decisions. Now, what are the conclusions on our side of the increased usage of accrual information? Probably most important, accrual accounting enabled the federal government to adapt the main fiscal policy instrument, the debt brake, to be based on accrual instead of cash accounting from next year. What is also important, many risk-relevant transactions are taken into account for budgeting when the corresponding accrual entry is made, and not only at the time of cash in or outflows. This was an active decision taken based on the availability of accrual information. Accrual accounting has further helped to better identify and measure some of its fiscal risks arising from contingent liabilities and put it into a more prominent place within financial reporting and putting them into the fiscal rule. Now, I would like to, for the rest of the time, also have a quick look at how fiscal risks are dealt with in the statistical world. As financial statistics directly relies on accounting data as its source data, it is worth to figure out how fiscal risks are finally considered there. Now you see GFSM 2014, this is the Government Finance Statistics Manual issued by the IMF, defines fiscal risks as any potential differences between actual and expected fiscal outcomes. GFSM further states that contingent liabilities create fiscal risks. Notably, it emphasizes the strong link to uncertainty. Now, from an accounting perspective, given that uncertainty also exists with provisions, just look at the definition in IPSAS 19, the question arises of how GFSM treats provisions. Now, GFSM is equally clear that provisions are generally not recognized in the balance sheet, although there are some exceptions, as the following slide will show. Switzerland uses 3 different statistical models, each with a different scope in liabilities. For first one, the ESA liability, Switzerland's system of national accounts, is based on the ESA 2010, which is the European system of accounts. And the ESA model has the narrowest scope of liabilities to recognize. Then the international statistical model of the IMF, the GFS model, is widely the same as the ESA. It additionally recognizes employee-related defined benefit schemes, which are an exception to the non-recognition of provisions I mentioned earlier. Then the third statistical model on the right, the FS model, is a national model used in Switzerland, which is generally in line with the requirements of IPSAS and the cantonal accounting requirements. Liabilities are recognized as soon as they meet the recognition criteria, such as past events, future outflows are probable, and they can be measured reliably. And as you can see, the FS liabilities additionally encompass the whole set of accounting provisions, such as restructuring costs, environmental risks, legal claims, but also any financial guarantee which is measurable. Now let's take a look at how accrual forms impacted the liabilities in the national statistical models and how they developed in relation to the traditional cash-based debt, such as the Maastricht debt. It is also a comparison between the narrow scope and the wider scope of liabilities in the statistical data produced in Switzerland, which is highlighted with the two red rectangles. You can see the development of Maastricht debt and FS liabilities from 1919, and you see in the 90s until the mid-zeros, both remained on a similar level. From then on, however, you can see very well that while Maastricht debt has declined, FS liabilities remain stable or have even increased slightly, which means the gap between the two significantly expanded in the last 15 years. In other words, the FS liabilities mirror the effect of the implementation of IPSAS in 2007 on the federal level very well. This is another way to highlight this development, as it directly compares the share of Maastricht debt relevant liabilities to the other non-Maastricht liabilities included in the national model. And you see from the early 90s on again until the mid-2000s, the share of Maastricht debt amounted to around 90% on average of all FS liabilities. With the implementation of IPSAS in 2007, the share suddenly dropped by 10 points to 75 to 80%. And then this development only intensified in the last 12 years, where the FS liabilities reached an all-time high of 40%, while the share of Maastricht debt fell to below 60% of all recognized liabilities. So the question is, where are the fiscal risks? Probably they are not only in the traditional debt. As the previous analyst has shown, the treatment of provisions is a main difference between international accounting standards and international statistical guidance. International statistical guidance states several reasons for the exclusions of provisions, such as liabilities are not conditional. Liabilities are unconditional and provisions are conditional. Many provisions are deemed not to be measurable, and there is also a symmetrical requirement for the purpose of national accounts. I won't go into much into these arguments. They are dealt with in the report in detail, but obviously the national statistical model does not share this view, as it relies on the accounting perspective. Now, what are our conclusions? The FS model, the national model, encompasses obviously a wider set of significant risk-relevant liabilities, such as pension obligations, guarantees, and environmental risks. It also more faithfully reflects the economic reality and the degree of fiscal risk to which the general government sector is exposed. And as the implementation of accrual-based standards is evolving worldwide and fiscal policy increasingly bases on accrual information, the question is warranted to what extent government finance statistics should be allowed to provide a more faithful depiction of the government financial position. This is especially due to the fact that in many countries, governments define and report fiscal targets based on statistical basis. Maybe as a last point, above considerations are probably even more relevant when talking about the possible inclusion of public corporations into a more comprehensive public sector statistics, as significant risks for government in terms of public corporations are in addition embedded in different provisions recognized in their respective balance sheet. Thank you very much for your attention. Kom op, Somnida.
네, 마크 월무스 위원님.
Thanks for your presentation, Mr. Mark Walmuth. Once again, I would like to thank the presenters once again for sharing and presenting valuable experiences and cases from each country. Now, we'll take a 5-minute break and then have discussions when we come back.
네, 발생주의 재무 정보를
Ladies and
활용한
gentlemen, we'll begin the panel discussion on managing fiscal risks using accruals. The moderator for the session is Professor Bong-hwan Kim of Graduate School of Public Administration, Seoul National University. He is the head of Sustainable Accounting and Financial Research Center under the Graduate School of Public Administration, SNU. He's the president of Korea Government Accounting Society. He's the member of the National Accounting System Deliberation Committee and the Center's National Accounting Advisory Board. He is actively conducting research on public sector accounting. Mr. Kim?
I'm Bong-hwan Kim from Seoul
안녕하십니까.
National University. I'm pleased to be a chair in this panel discussion. The biggest risk that I need to manage today is how to make sure we finish by the time we planned, so that all the staff go home on time. Here is my plan as a chair today. Because we have only 15 minutes, I'd like to ask each discussant 5 to 7 minutes comment. Then I want to hear from presenters any response or answers on discussions. If we have time left, then I will open questions and comment to the floor. Before we start, let me briefly introduce today's discussant. From abroad and online, we have Ibor Bijli, Senior Policy Analyst from OECD. And Thomas Miller Markisberger, Chair of FSB CAG. Thank you. And here in Korea, we have Lee Eun-kyung, Director of Public Institution Evaluation Division, NABO. Thank you. And we have Jang Yun-jung, Associate Fellow of KPFIS. Thank you. And last but not least, Professor Han Jong-seok from Aju University. Okay, we have just had a presentation on how UK, Australia, and Austria, and Switzerland manage fiscal risk using accrual information. Now I'd like to ask each of you to share your thoughts and comment on each country's case and any implication or suggestion you might have, hopefully something we can apply to Korea or any other country on managing fiscal risk using financial information. Again, due to time constraint, please limit your comments 5 to 7 minutes. Ibor Bijli, would you like to start?
Thank you very much, Professor Kim. It's a pleasure to be here. I'd just like to first congratulate KIPF and the researchers on the excellent set of case studies. I think they were very varied and interesting and demonstrate well both the benefits and challenges of using accruals for the management of fiscal risks. The case studies, I think, for me, clearly demonstrate the valuable role that accruals accounting principles have played in better identifying and quantifying fiscal risks, identifying contingent liabilities, estimating long-term liabilities, and impairments to public assets, for example. I think Switzerland's experience, which we just heard about, offers good examples of how accruals-based analysis can expose previously hidden issues and lead to changes in government policy, such as the decision to liquidate a rescue fund. That wasn't actually mentioned in the presentation, but it's an interesting part of the paper. and the policy changes made to the direct benefit pension scheme. I think the cases also show that applying accruals principle also needs careful judgment. Accruals principles in themselves don't provide the answers to difficult policy questions, such as which fiscal risks to recognise, nor do they give guidance on the appropriate policy responses. I think the UK example shows how the fiscal risks that government chooses to focus on change over time according to circumstances. Traditionally, governments have focused on shorter-term quantifiable risks, but the UK and other case studies show how that list of potential risks is expanding, and countries differ in their views of what are significant risks. Hence, I think the OECD view the definition, our view that the definition of fiscal risk should not aim at comprehensive coverage of a potentially infinite number of fiscal risks, but rather aim at supporting policy decision-making and facilitating oversight and accountability. I think the UK case also offers interesting ideas on, the management of fiscal risks, the practical arrangements for doing that, the idea of having separate reports from the Office of Budget Responsibility on fiscal risks and long-term fiscal sustainability, and having an institutional focus on balance sheet issues, such as their contingent liability central capability. I think the case studies for me reveal a lot of variability and also some inconsistency in approaches, which is interesting. Different approaches to classifying fiscal risks, differences in the types of fiscal risks that government choose to address, and especially the extent to which they consider long-term risks. Some inconsistencies between different measurement frameworks, e.g. the differences between the ESA, GFS and IPSAS-based measurement, and variability in the usage of accruals-based information, noticing the challenges in making people aware of accruals-based information requires an investment in education and awareness. I'm sorry about the background noise. There's some childcare. It's late at night here, and I have two small children who are not respecting the fact that there's a conference going on. So my apologies for that. I think COVID and climate-related disasters clearly raise questions about traditional approaches to managing fiscal risks and contingent liabilities. For example, some questions I put on the table here. Should governments enlarge the scope of fiscal risk management? Should perhaps some items that are currently treated as fiscal risks, be integrated into regular budget forecasts? As climate disasters become a regular event, do they just become another long-term budget pressure, such as population aging? And how helpful are accruals in concepts in managing long-term fiscal risks, e.g. the sustainability of pension funds, given that small adjustments in the discount rate, for example, can lead to huge variations in items on the government balance sheet. So I just leave those thoughts with you, and thanks again for the excellent organisation of this event.
Thank you, Mr. Iboro. Yes, you raised some important questions. Whether this fiscal risk need to be included or considered in the budget forecast, and how climate change will be taken into account to budget forecast. Thank you for your comment and some, imposing some important questions. Okay, next, I would like to ask Thomas Miller-Markisberger for your comments and or suggestions.
Yeah, thank you very much for the invite to this excellent symposium, and thanks to all the presenters and researchers for their excellent work. I will definitely benefit from the excellent studies being provided far beyond this symposium. So it has been excellent. I think the presentations have kind of been very complimentary, I guess, and have really provided a broad picture. That's excellent. So let me start with kind of first the meaning of fiscal risk, and I think it has come out of kind of all presentations and all studies that as much as kind of contingent liabilities are mentioned when talking about fiscal risks, the understanding should not be limited to contingent liabilities. It should be understood, and I think some of the presenters already highlighted that they are based on or they are kind of basing their definition on the IMF's definition as the possibility of deviations of fiscal outcomes from what was expected at the time of budget or forecast. I think that's really the breadth that should be focused on. So this can materialize in the area of revenues and in the area of expenses, and both have a connection to the balance sheet item assets and liabilities or provisions or even contingent liabilities. This is where they come into play as again. And as outlined in the study of the UK have consequently split fiscal risk into 6 distinct groups, from which 4 are directly linked to these elements of financial statements, namely revenue risks, primary spending risks, balance sheet risks, and debt interest risks. And it is for that reason that, in my view, fiscal risk management cannot be discussed in separation from asset and liability management, which we are discussing tomorrow, but we should be clear that they are clearly interlinked, as the latter partly supports fiscal risk management. And I think that has come out of all presentations very well. Talking about what are major fiscal risks, and I think not surprisingly, probably in my view, a general classification of certain fiscal risks as being major compared to others is not possible. I think that has come out of the presentations as well. The magnitude of the impact of a fiscal risk when materializing and the probability for its crystallization, as shown in the UK report, varies according to current macroeconomic circumstances. And I think COVID-19 has taught us that lesson quite well. So, however, some fiscal risks are more visible than others, and this is where accrual accounting comes into play. Financial assets and financial liabilities, so-called explicit liabilities, are visible to governments regardless of the accounting system, as they are connected to cash management, hence cash-based accounting. Same applies to tax revenue and short, midterm and long-term spending for policy programs, I guess. So those are either budgeted or forecasted in midterm projections or long-term fiscal sustainability reports. Non-financial liabilities or implicit liabilities such as provisions and contingent liabilities, however, are not visible for fiscal risk management if accrual accounting is not yet applied or the accrual accounting information is not used for assessment of fiscal risks. And I think that has come out of the studies quite well as well and the presentations. So regarding the current status, according to my understanding of the current status of fiscal risk identification and management in Korea, there is a differentiation between fiscal risk management and financial management, i.e. management of assets and liabilities. In my views, again, this belongs together and cannot be separated, should not be separated. The one, financial management, serves the other, fiscal risk management. And furthermore, as much as I understand the current approach, accrual financial information from financial statements is not used for fiscal risk management. Contingent liabilities are provided in the notes, but they are not used as a basis for spending risk assessment or balance sheet risk assessment, according to my understanding. Same applies to provisions. Regarding contingent liabilities, I support the grouping or classification, as it is done in Korea, of those for presentational purposes. The risk, however, is that an exhaustive list might result in excluding new contingent liabilities from being identified or being presented in the notes if they do not fit into one of the focus buckets. So there should at least be an open bucket called the other contingent liabilities, containing those which do not fit into one of the 5 clearly defined groups. So opinion on the managing fiscal risk by using accrual information as the last part of my intervention. So based on the fiscal risk classification, i.e. or e.g. used by the UK, accrual information should be used for all financial statement related fiscal risks. Whereas the usefulness for the revenue risk assessment might be limited, as the statistical models used for revenue recognition according to IPSAS 23 are only short-term projections, the contribution to spending risks is much higher. Policy-related obligations materialize beyond explicit financial liabilities in provisions or contingent liabilities and are therefore suitable to identify future higher spending compared to budget or forecasts. So this is where accrual accounting really can serve the purpose. Same applies to balance sheet risks, as the financial statement close process implies a regular assessment of assets for impairment triggers. I think Bernard has highlighted that quite well, e.g. based on changes in use, in technology, or based on insufficient maintenance levels, as well as a regular assessment of transactions leading to uncertain liabilities in timing and or amount, or an assessment of contingent liabilities regarding a potential change in the probability of cash outflows. Based on these assessments, management cannot take specific measures to minimize or even avoid future cash flows. I think that has been mentioned by Mark in terms of what are measures derived from this analysis. However, and that's probably the last comment I have to make, these procedures describe an ex post use of financial information for fiscal risk management, providing information on already existing risks. Mature countries use accrual accounting processes for the ex ante management of potential risks before they are incurred, by requiring operating departments to simulate the impact of a planned transaction or a draft contract on the financial statements of future years. So based on that analysis, a decision on the sustainability, acceptance, and mitigation of incurring a specific risk can be made. So these decisions are informed by observed developments of comparable transactions and their impact on financial statements in the past, but they are kind of looking in the future. So I want to conclude with 3 advices and recommendations. First, and I think that has come out very clearly from the presentations and studies, the use is limited because of the complexity of the financial statements and the lack of knowledge on and expertise on the level of those who have to make the decisions. So it's very important to kind of invest in clear communication and education of parliamentarians and policymakers, and to simplify the messages of financial statements. Advice number 2, the use of accrual information needs to be institutionalized by law and structures. I think that has come out very clearly from UK, but also from the Canada study and from others, New Zealand, for instance, as well. So establishment of like a public accounts committee with the obligation to review and report on fiscal risks based on public accounts. Advice number 3, and I will finish with that, don't focus on ex post analysis only, but embed it in decision-making processes in order to have an ex ante view on fiscal risks created by the operations. Thank you very much.
Okay, thank you very much, and thank you for these 3 advice. I mean, so basically, Chair Thomas Miller summarized that our accrual use, information use is limited, because of complexity and the lack of education. So we need to enhance those, education to improve the use of the accrual information. And second, the use of accrual information needs to be institutionalized, like a UK. I think that's very important advice. And the third, we need to focus ex-ante risk management rather than ex-post. Thank you for your comments. Next, I want to move to the Lee Eun-kyung, Director of NABO.
First of all, we look at how the fiscal risk reporting has been used in different world, and I think for our country and also other countries are all under the influence of COVID-19, and in that sense, this symposium is such a timely covering such a timely topic. There are various reports that that estimates and that analyzes the fiscal risk in each country, and it is very meaningful to understand that a lot of countries are doing that. So as you know, in Korea, in notes of the financial statements, like the provisions and the contingent liabilities are recognized. Korea is going under the influence of COVID-19, and a lot of policy finance are provided. So government is providing guarantees. So it's almost 230 trillion won last year, and it grew almost 40 trillion won within the span of 1 year. The policy finance is provided a lot more. It's because of the COVID-19. So the guarantee scale and how other guarantee are given, and I would like to say that in Korea we do not have systematic way to manage those guarantees. And regarding this, so I paid attention to Austria's case. So when I look at Austria's case, it seemed like they paid a lot of attention to guarantee. So they are mandated to submit an annual report and guarantee issuance to the National Assembly, manages limits, and also they prepare laws and regulations on individual guarantee limits, and also they have approval procedures. And I think these are something that Korea can benchmark. And also in UK, they were managing fiscal risks in a leading manner, and various reports were written. I was very surprised that the UK government introduced a contingent liability approval system. I thought that was very interesting. And there are policy risks, there are climate risks, there are various risks that we are realizing. And those are the risks I believe that the Korean government also needs to recognize. And I thought it had implications for our government. So I would like to understand, if there is a consensus within the country, but then the risk reported in FRR reports, I would like to understand, how are they actually used in the country? For example, in Korea, so since 2011, we've been using accrual-based accounting financial statements. However, it is not being used well. So if we introduce FRR, I would like to think about how we could adapt FRR reports in Korea. So those are the comments that I wanted to add.
Yeah, I think she mentioned about a rapid increase of guarantee in Korea due to COVID-19, and I think it's a big lesson we can learn from Austria case, because Austria looks like managing guarantee very well. So maybe we can hear from Bernard Schatz after this discussion about his opinion on this guarantee management, and I guess the use of financial information or accrual information, as we see in the Austria's survey, I think it's very low in Austria as well, which we need to work on. Okay, thank you. Now I'd like to move to Jang Yoon-jung, Associate Fellow of KPFIS.
Good afternoon.
I am very pleased to be here, and I'd like to thank the organizer and the presenters who provided the valuable research for this symposium. The theme of the symposium is the fiscal risk identification and asset liability management. And because of the COVID-19, the risk identification is being changed. I think it is a very timely theme. So we have to systematically manage this risk, and we can learn some excellent cases from the UK and Australia and other countries as well. From the UK's cases, I learned. Well, actually, I paid to visit to the UK at the point of establishment of OBR and witnessed the efficiency, and I got impressed. And and it was a great opportunity for me to take a look at the financial risk reports of the OBR. And in transitioning to the accrual accounting, there was a lot of efforts in the UK, and as the Australian presentation mentioned, there is a learning curve that we have to follow in order to appropriately transit to the accrual accounting. And this implies a lot to Korea. In Switzerland, so the debt break will be based on the accrual informations or accounting. So I believe it will have a lot of implications in terms of the risk management in Korea. Well, I would like to make some suggestions, which came down to 2 points. First, with accrual information, we need to manage financial risk, and we have to think about how to use this momentum. From next year, I believe we are going to have a new administration, and I believe that it is going to have the holistic reforms. So as many pointed out before, the accounting standards, transparency, and the consistency have to be key in these reforms. I believe these two items have to be better reflected in the new accounting systems. So I learned that several stages that Switzerland had went through. Transitioning to the accrual accounting, I believe this will be a great opportunity from next year. So in order to do that, first, we have to think about the consistency with the international standards. And also, I believe the core information is really important in this vein. Second, based on the core informations, we examined the other countries' risk management cases, and I believe that if we follow the core informations, it will be easier for us to benchmark other countries' cases. And for the contingent liability, well, actually, it was mentioned a lot today. And we have to diversify the liability from the perspective of the financial risk management and military and the public official pensions are discussed as the responsibility of the government. However, I believe the national pension has to be one of the key parts that has to be considered and mentioned by the government in terms of the financial risk management, as I'm going to receive the national pension later. And we have to think about the possibility of the use of the accrual informations to manage a financial risk from the mid to long-term perspective. I believe the 10-year plan is established today. And the administration and the assembly is preparing the mid to long-term fiscal reports, which are playing the key roles in the financial risk management. However, we have to take a step forward. We are not simply think that, oh, our national debt is going to be like this in after 50 years. Well, we have to escape from this simple thinking. We have to think about the variety of the aspects of the financial risk. And we have to come up with a new index that can be calculated based on the accrual informations. And I believe the economic environment has to be included in this vein. FR of the UK and Fiscal Risk Management Guideline of the OECD mentioned that risk management are based on the accuracy and the responsibility, and the UK OBR forecast carried out 5 stages of the analysis, so it is very thorough analysis, I believe. So it is a better way for us to consider and forecast the future risk and take into consideration of this risk into reports, and they are disclosing this information to the public. However, we are not there yet in Korea. I believe it's not really disclosed to the public. So we have to increase the accuracy. And based on this information, I believe that we can have enhanced risk management perspective. Well, actually, there are many financial risks. It's related to the health and the national pensions. I believe we have to systemize this risk, and we have to integrate those risks into our financial statements. Thank you very much.
Thank you, Dr. Jang. Actually, in Korea, we will have a presidential election next year. So I think she's, proposing in new government, this fiscal rule using accrual information will be implemented to manage fiscal risk. And she also talked about, this accuracy of long-term forecast, which is, I think, well handled in UK. So maybe Manju Kala, maybe later you might want to comment on this, the long-term forecast in UK. Okay, lastly, I'd like to ask Professor Han for the comment.
Thank you very much for having me at this great symposium. I really appreciate all presenters who share their valuable experience from their countries. It was a very precious time for me to learn other countries' fiscal risk management procedure. Based on my knowledge, Korea Fiscal Authority is not fully using accrual information. Today's discussion, I think, it will really help and lead them to use this kinds of information in their fiscal planning. And Korea has several midterm plans, such as like a government debt management plan or government guarantee management plans. But these kinds of plans does not take into account those accrual information. So I hope today's discussion helps the fiscal authority to use these kinds of information to expand their risk management ability and to deal with this, to use this better information to deal with the fiscal risk. Thank you very much.
Thank you. Now, I want to hear responses or answers from presenters. I understand the organizer, KIPF, has already delivered some specific questions from discussants on each country's case. You might want to answer those questions as well if you want. Unfortunately, with time constraint, I can give only 3 minutes response to each country. So Manju Kala, can you comment or answer those questions, or some of the questions that raised by the discussant?
Thank you so much. I'm conscious I took a lot of time at the beginning, so I will stick to 3 minutes, if not less. To answer one of the questions that were raised by the discussants about long-term forecasts within the UK and costing, we have had, I think, UK has been on quite a journey. We've had the accrual information for a while. It's given us an opportunity to enhance the information. But actually using the information has been quite a challenge, because it's very much led by the national accounts, by the GFS, and then supplemented with the accrual accounting, and hopefully by demonstrating the value, we can the completeness in terms of insight and providing that granular level information that you get from accrual accounting. That's why building up that information, I think the statisticians have been able to see the value of accrual accounting and the resource accounts, the financial statements on an accrual basis. Interestingly, maybe interesting to the audience, we do have accrual accounting for the tax revenue side. Actually, I led that when I was at HMRC many years ago. So, but just to show, so on the costing of the information, we've had, accrual accounting in central government was last to be implemented in 2000 and 2001. 2009 moved to, but we weren't really publishing the date, whilst we were publishing the financial statements. We actually, first whole of government accounts wasn't published in 2009, but we've had a lot of time to develop that information. And when the first fiscal risk report was published in 2017, that was the opportunity to say, actually, we have all this other information. Why don't we use it? We did have a national asset strategy. We were using that. But that granular information, bottom up, gives so much more, provides greater insight. Look, sometimes we don't like what we see, but the more we know, the better we are to deal with it. Today, our Supreme Audit Institution, the National Audit Office, I just checked quickly while we were talking, their COVID-19 tracker cost, long-term cost is estimated to be £370 billion. We have to manage that as well as the other risks. But I'll leave you with that. And the other questions on climate change risk, I will report to you separately. But I want to make sure, in respect to my other presenters, I want to stick to time.
Thank you, Manju. And update on the very fresh information. I think you have UK has a very recent and up-to-date forecast for the liabilities you need to manage. Thank you. Next, I want to ask Mike Blake on any comment. I think there was some questions, beforehand about, intergenerational report. I mean, you guys have intergenerational report, whether that is applicable to Korea. I mean, if you have any thought on that, or any other comment if you have.
Yeah, look, thank you, and thank you for the advanced question. So in my paper, I did recommend that Korea start to think about developing these, what we call intergenerational reports in Australia. Intergenerational reports are reports that require government to look forward 40 years in Australia's case, and in other countries have different periods that they look forward. Some vary between 5 up to, I think, in America, 70 years. So the idea of these reports is to try to take government's current policy settings and with the risks that we currently face or the risks that we anticipate, be those contingent that we expect might transpire into the future, recognizing that 40 years is going to cover more than 1 or 2 generations of our community. How does the government make sure that, based on what it's doing today, what's the likelihood of the effect of today's decision going to be on communities well into the future? So those intergenerational reports now have to be prepared by our government once every 5 years. Let's face it, we're going to get our judgments wrong because it's very difficult to predict the future. So often it's necessary to revisit those reports on a regular basis, in our case, every 5 years. The private sector is moving quite quickly in this direction with the establishment by the IFRS Foundation and others looking for the corporate sector to provide disclosures around the risks of climate change on their balance sheets. I think it's essential that governments start to look at what does the future look like? How do we plan for it now? Even if we get it wrong, it's better to get it wrong than do nothing. So I encourage the Korean government to start thinking about those sorts of reports and the resources and systems and so on that will be required to make the forecast that will be required.
Thank you, Mike Blake, for your suggestion and advice on the intergenerational report. Okay, next I want to ask Fernando Schatz. Would you like to comment on this guarantee report you have? Considering the importance of guarantee in Korea these days.
Sure, I'm more than happy to give you some insights into the Austrian management of guarantees. So from our experience, the first really important point is to have a very clear legal framework. This also means that you should be very explicit about a potential threshold of guarantees. So we have a limit set of 175% of revenues from the previous year. So this is a moving target. Guarantees have to be managed to remain under this threshold, and also be very clear about what kind of risks are you actually taking. So is it the default of a certain finance loan, or is it the default of the company, or are there certain risks actually you're not going to cover? So I think it's really important to be very clear on that, and also on the roles and responsibilities of the entities and players in the public financial management system. One element I would want to highlight as well is that actually the one who is signing off on the guarantee should be the one who is bearing the risk. So if you have this kind of unity, it always ensures that you're quite careful on taking over something which might end up in your accounts. The second step I'd like to encourage is really think about the information management. So it's easily necessary to track hundreds of entities, hundreds of individuals, probably sometimes. So it makes sense to integrate these reporting elements into a current reporting framework, and also have somebody checking on it. So in our case, for example, there is the statistical office who is knowledgeable of all public sector entities and who tracks a list also when entities are created, and they check on them actually if they don't file their guarantees and remind them actually to comply with the reporting requirements. And the last point I really want to highlight, because I think that made a big difference for us in Austria, is actually the accrual accounting part of things. So if you have your guarantee report, and in the time of the accrual budgeting cycle, you have to ask yourself, what kind of number will you put into the budget for the provisions of those guarantee schemes? It's really where the tire hits the road, where the pressure is coming up. You have to make a decision on that. Otherwise, it's just a report. And we felt that this is a huge difference if you have to take it into the budget and make, put a number on it. And that really helped a lot of people taking it much more seriously to manage the guarantee schemes.
Thank you, Bernhard Schatz. I guess that's a big difference between Austria and Korea. I think we don't have accrual budgeting yet. So I think accrual budget without accrual budgeting, accrual information cannot be fully used. In that sense, I think you are in well advanced compared to Korea. Thank you for your answers. Last but not least, Mark Wormus. I think we have some question about debt break. I mean, you just briefly mentioned debt break in your presentation. Could you elaborate on debt break if you can?
Yes, for sure. The debt break, just give you background, the debt break was introduced roughly 20 years ago, where the Swiss people took a vote on it, and it was with a very high share of yes votes, around 83%, which is really high, was approved. And because the Swiss people didn't want the government to be indebted too much as the debt raised to high levels during the 90s. And at that time, the government had cash accounting or modified cash, and that's why it was clear that debt break had to be based on cash accounting, because no accrual information were available. Then later on, when we had the project to implement accrual accounting and budgeting, still the debt break was based on cash, which is the most important fiscal policy instrument. As I said, the IPSAS was introduced thanks to the support of senior level officials and the Minister of Finance. At the time, I think it's very important to have these key personnel backing such reforms. But then later on, when we implemented the parliament, it was actually a member of parliament who asked, now you have accrual accounting and budgeting for 10 years, so why don't you use it for the main fiscal rules, the debt break? And then the parliament took a vote on it and said, yes, the government should use it. And that's where we landed. The government supported it, and we have this rule. So just to see, it was a mixture of senior level officials and members of parliament. As soon as you put the figure into the balance sheet, we realized that the members of parliament look at it more deeply than if it's just outside off balance. And I think this was a main takeaway. So 10 years ago, it was almost unthinkable to move that far. I have to mention some last thing. We are not fully on accrual accounting with the debt break. We don't use depreciation. We charge the debt break already at the time of investment, because we think this is the more relevant time, the time of investment to take into account. So this all leads that we are, that's what Thomas has said, that we are more ex ante. So no new transactions are taken into account, but they are taken into account earlier with the accrual-based debt break.
Thank you, Mark, for sharing background of the debt break. I have to mention that the presentation time was very limited, but in the full report of all the presenters have much more content, and much more explanation of what you presented today. I think time is almost up, but if anyone have any burning questions, any presenters, any discussant, then I can take one. If not, then okay. I really appreciate all discussant, presenters, and audience for this great session. And this concludes panel discussion. Thank you. Thank you all.
네, 오늘 훌륭한 발표와 그리고 종합 토론에 참석해 주신
Thank you,
모든
everyone.
분들께
Thank
다시
you,
한번
panelists.
감사의
Thank you,
말씀을
discussants,
드립니다.
for participating in the final session. So tomorrow's theme is Assets and Liabilities Management based on accrual-based financial information. We have presentations from UK, New Zealand, Canada, and France. We also have a panel discussion afterwards. I would like to ask you to pay attention to our second day tomorrow. All the presentation materials will be shared on the GAFSC's website and KIPF's YouTube channel. And you'll be able to revisit those two platforms to check the materials. Thank you so much for being with us until the late afternoon. Thank you very much.